Joining us right now for more on the markets is Jim Paulsen. He's the author of the newsletter Paulsen Perspectives and, of course, the former chief investment strategist for both the Leuthold Group and Wells Capital Management. Jim, let's just talk about what you're expecting. You think next year you could see the S&P up by about 10%, but you think it will be even bigger, maybe 15 to 20% if you're looking at the broader market, maybe some of the small caps. Why is that?
I do, Becky. Thanks for having me this morning. I think that there's a lot of positive force yet for the stock market. I think we're going to get a continued moderation inflation next year. We're going to get the Fed going to continue to ease. Yields are going to come down further on bond market. Money supply is rising. But I think the biggest untapped force that we haven't used yet really in this cycle, and it's odd that we haven't used it this far into it, is Main Street confidence still remains kind of pessimistic. And by this point in past cycles, it would have already come up. And as confidence rises, a lot of good things happen both on Main Street and Wall Street. Animal spirit behaviors break out, and that leads to better economic growth and better stock prices. And I'll just give you an example. If I go back to 1952 and look at all the months when the U.S. Consumer Confidence Index rose versus when it fell, the total return in the S&P 500 annualizes at about 20.5% during months when it rises versus 5.5% during months when it falls. So rising confidence is a big deal. And if anybody can finally revive that, I think we're going to see broader market participation. We're starting to see a little bit of that now with the small caps doing better, equal weighted S&P, Becky. But I think that the confidence goes up in a bigger way next year. And I think we're going to see, some of the cyclicals and the value stocks and equal weighted smalls, micro caps, IPO activities, some things that respond more to aggressive or animal spirit behaviors do much better. So I think it is a year to broaden your portfolio beyond the S&P, but I think the S&P is going to.
Hey, Jim, I know that you are thinking that inflation will come below 2% next year. Your one concern are tariffs. You don't like those policies.
I don't. I don't understand that. I mean, to me, a tariff is just a tax. It's a restrictive force on the economy overall. I know a lot of people think it's going to lead to inflation. I don't see that at all. I think there could be a temporary boost, but it's a disinflationary force. And the problem with this is when we raise taxes, everyone else around the globe is going to raise them too, and it's going to lead to a global tax hike. And I don't see how anyone wins out of that result. I don't think it's a good policy.
Okay. Jim, we want to thank you for being with us today. Always appreciate checking in with you, and we will see you again soon, okay?